Firstly, let's take a look at what happened on the bourse today. Yesterday, it was down 0.65%. What can we expect today?
Thank you, Finlay, for having me. Today was a bit worse than yesterday. Today, the all-share index went down by 1.45% to close at 24,641.07 points. We noted today that there were only 28 gainers on the bourse, whilst there were 52 losers and 50 stocks that stayed flat. We also noted that on the losers chart, we had companies like BCC, Oceanic Bank, and Finbank PLC, whilst on the gainers chart, we had Wapik Insurance, ABC Transport leading the charge of gainers. Volume was driven mainly today by UBA, leading the charge of volume drivers for today. But all in all, the bourse went down by 1.45% today.
Well, let's take a look at some of the results that have come out. We'll start with Tantalizer's half-year results. What would you attribute their profit margins to?
Well, Tantalizers came out with a half-year result that was a bit impressive. We noted that turnover had gone up to 1.4 billion for the half year. This is about 25.7% increase in turnover for Tantalizers. Also, we saw that the bottom line net income went up to 105 million, which is about 26% increase. We've always said that for the companies in the food and beverage subsector of the stock exchange, we expect them to do well because their products are high demand, have a high demand right now, and no matter what people do, you will still have recourse to satisfying your bodily needs.
And what do you think the company should be doing to drive up their sales even further?
Well, what the company should be doing right now is to continue to cut cost. If you look at it critically, with a turnover of 1.4 billion and having a net income of 105 million for half year, it shows that margins are thin from their line of business, and that if everything they do to drive down their cost would definitely drive down their bottom line. What we expect the company to continue to do is to pursue areas of cost cutting and being prudent with their expenses so that the bottom line will continue to go up. They have been on an expansion mode, but we must caution at this point that the level of expansion should be such that the cash flows of the company can sustain.
And let's quickly take a look at results out of PZ, full year results. What would you say their outlook is for the next 6 months, and where should they be cutting costs?
Well, for PZ, it was quite an impressive result. As a matter of fact, turnover went up to about 80 billion, which was about a 22% increase in terms of comparison year to year from the last year. And if you look at that result also, you see that their bottom line went up to close at 5.3 billion naira. That's another close to 22% increase in profit after tax. What has happened to PZ is that they've done well in terms of their product line. They are also part of the line of industry that we expect that with the macroeconomic condition in the country should continue to do well. They have been also on an expansionary mode. They started recently to launch what they call the Project Unity, for which they've sought to increase the production of their soap line to about 100% in the next 2 years. They've also increased and bettered their distribution channels. All of this has shown positively to their turnover and to their bottom line. What we expect the company to do is to continue to drive down cost. We expect them to continue to have the kind of allegiances that they've had, like the one they had with higher thermocoal, for which their thermocoal freezers are really in high demand. So for PZ, it's been a good year.